All right, guys, back in the action once again. Hope you all had a great weekend, but it's about that time of day again here. Back to the action Monday evening. It's June 28th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. If you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades for tomorrow. That's Tuesday's trading session. I got a fantastic video in store for you guys tonight. Charts are already in the background, as you can see. S&P's ready, Nasdaq is ready, gold is ready. Glad to see you already right along with us. Boy, oh boy, lots of great trades on my radar for tomorrow. Got some trends on the Eminis, right? So we're buying pullbacks and watching for reversals tomorrow on the Eminis. Gold, of course, is all coiled up in a range today. But boy, oh boy, we've been in range for a week now on the gold ahead of those non-farm payrolls later this week. So on gold, we're trying to buy low, sell high. We're looking for failure setups on gold and watching for some breakouts. I got a lot of really great trades on my radar for all three of these markets. So, buying pullbacks on the E-minis. Those are bullish right now, and fading those breakouts on the gold here. Now, before we jump into this video tonight, though, and of course, by the end of this video tonight, you'll know my favorite trades for tomorrow. You'll also know some things to watch out for and avoid, whether you're trading on your own or whether you're trading with us tomorrow morning in our trade room. Before we jump into the video tonight, though, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. We publish this video newsletter every evening with our best trade ideas for the following day, so make sure you subscribe so you don't miss tomorrow night's video. And don't forget also, too, if you have any questions for me, I'd love to answer all your questions, so drop those questions in the comments section if you got them. And if you enjoyed this video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up here for us on this video. I really appreciate you guys tuning in every evening, so make sure you subscribe, right? Hit the little bell icon so you always get notified when I publish something new. Drop those questions if you got them, and thumbs up if you guys are the content here on this YouTube video. But enough of the intro, though. Time is ticking. Let's get ready for Tuesday. Boy, Tuesday is right around the corner. Now, of course, markets are, well, again, like I said in the introduction, we got the bulls well in control here on the E-minis, right? So nice big bull trend on the S&P, a nice bull trend on the Nasdaq. So I'd like to buy pullbacks on this, but it's not as easy as just buying pullbacks. On the S&P, we are right above the range from the end of last week and today. So this is a major area of resistance here on the S&P right now. Now, I'd love to buy a pullback, but I have to be a little bit selective as far as timing my entries around the top of that trading range. I wouldn't be opposed to buying a breakout. I got some really great levels waiting overhead. We'll go over those here in a moment. And at the same time, trading reversals. Reversals back into that range here on the S&P. The same thing kind of goes to Nasdaq. The Nasdaq's got some great little shallow pullbacks, some deep pullback areas, but you'll notice in the Nasdaq there's a range right there, right? That range I think is the biggest variable we have to deal with for tomorrow. So we're going to talk about why that range is important and kind of how to trade around it and how to use that range as a resource for us rather than as a liability for us tomorrow. And again, the gold's in a range. It's not just a range today. This range has been going on for a week now. Now, I'll tell you, if there's one market that is ripe for a big breakout at some point tomorrow, gold is definitely it. We've been sitting inside a range for a week now on gold, so the more we coil up in that range, the more we've got potential for a big bull breakout or a bear breakout. So we'll talk about how to trade those breakouts. But I mean, let's face it, until non-farm Friday comes on Friday morning, till we get some of those inflation numbers later this week, we definitely want to be focused on buying low at support, selling high at resistance, and we'll talk about kind of timing the entries because it's not as easy as just buying low and selling high. Momentum plays a big factor in that to help us time the entries. So, again, by the end of this video tonight, you'll know exactly what to look for and kind of what traps to avoid along the way. Before we jump into our first chart tonight, though, why don't we grab a look at the schedule for tomorrow? That way everybody's on the same page here for us. It is the end of the month, right? End of the month into a brand new month of July. Now, end of the month, anytime we have the last couple days of the month, we expect there to be some increased volatility, right? So we're going into, 29th and 30th here, next couple days here, and then right into that new month. So we do expect to see an uptick in volatility. especially this time of the year, right? It is summertime. I'm not, some folks will say, well, you can't really trade very much in summertime. I don't buy into that. I take whatever the market gives me every day. I try to make zero assumptions no matter what time of the year it is. But with this being summertime, a little bit lower volume, with a big employment number on Friday, we may see some jumpy markets this week, right? You combine extra volatility that we always see into the end of the month with a little bit of lower volume, again, summertime trading. Everybody appears to be pretty obsessed with that employment number on Friday for good reason, right? The Fed has pretty much told us that employment and jobs is one of the last kind of pieces of the puzzle before they know when they're going to start raising rates. So the employment number on Friday, I would imagine we might see some lower volume all week, right? As traders kind of wait for this. And of course, you get the holiday weekend, the 4th of July holiday being on Sunday. So this is definitely a week where we may see that, that downtick in volume. And that, of course, by default makes less liquidity and more volatility. So expecting more volatility this week. Big news is definitely later on in the week here. But I'll tell you, there's no shortage of nice news events. And I think plenty of opportunity here this week here for us as traders start to kind of go into the end of the month. Now, looking at tomorrow on June 29th, right, Tuesday's trading session, the big news tomorrow is going to be that consumer confidence number at 10 o'clock Eastern time. I'd love to think the Case-Shiller Home Price Index, it's going to say big, right? That's what's going to say tomorrow. No one's expecting anything but a big number out of that home sales number or the home price number. Pretty much every zip code in the world went up in value. So that I don't think anyone's guessing on that. The big number tomorrow is that 10 o'clock consumer confidence. And again, because jobs are such a big part of the Fed's decision right now, right? We already know inflation is high. They're looking at jobs. That consumer confidence number, there's one little piece of the consumer confidence report that says, how difficult is it to find a job? And that's going to be the part of that consumer confidence report tomorrow. The traders and investors will definitely be watching the most. Now, that goes right along with the fact that we typically see our best setups between 10 o'clock and 11 o'clock Eastern time. So if there's one time you want to be at your desk tomorrow, that 10 o'clock, what I would say is that 9:45 to 10:45 hour of time, definitely the best time to be at your desk tomorrow. We, of course, will be trading from 8 o'clock on tomorrow in our trade room with the big news tomorrow at 10 o'clock Eastern time. And again, speaking of our trade room, don't forget, every morning, Monday through Friday, we're going to get together here this week. And we're going to trade this stuff together. I'll put all the membership links for you guys right below this video, either in the button on the blog or the description of this YouTube video. Definitely grab that link, get registered. I would love to see you there, right there with us every morning at the opening bell. And again, right, big news tomorrow, 10 o'clock Eastern time. It'll be that jobs aspect, little piece of that consumer confidence number. Are jobs difficult to find? Yes or no, right? That type of survey question will be on our radar for tomorrow. Now, we know what the big news looks like. We know we got some big news coming later on this week. I'll talk more about the news we're dealing with because, as you can see, we got PMIs, and ISMs. Got a lot going on here this week as we finish up the month of June. We'll keep you guys posted here, so make sure you stay tuned for more newsletters later on in the week. S&P's here, Nasdaq's ready, gold is ready. Got some trends on the Eminis, the Nasdaq and the S&P, and a range on the gold. Let's kick this thing off here tonight with the S&P 500. Now again, at first glance, you would think this market is nothing but a bull trend, but you look at what actually happened today, and you can see this market was, for the most part, a bloody mess, right around that range right in the middle. What's the key takeaway right now on the S&P? The key takeaway is we're definitely an overall bull market, but there's a range right here. And of course, ranges act like magnets, and the market will basically rotate, right? From below the range, above the range, below the range, above the range, below the range, right above the range. We want to try to find levels of support to buy below the range and find levels of resistance, right, to sell above the range, right? Think about it. Ranges act like magnets. I want to buy low at support levels. I want to sell high at resistance levels. And you can definitely see we got these expanding triangle levels on here, which really do make a lot of sense, right? They make a lot of sense. You can see how the market is rotating back around. And so, yes, we're very bullish right now, right? And because of that, I wouldn't mind being a buyer. I definitely wouldn't mind being a buyer, but I have to be realistic, right? We're at all-time highs. Again, we're right at the the major top of that range here. So, really at this point, you're either waiting for, because there's a lot of strength coming off this low, right? Let's make no doubt about it, right? There's no question asked. We know we're very strong. Anytime we see a strong move in one direction, we expect another leg in the same direction. So I would love to buy this pullback, and I honestly wouldn't mind buying a breakout. I've got some levels up overhead at that 94 and let's call it 94 and 3/4. That is where I think this market is going to try to go here if we continue this move higher before we run into that 4,300 big round number. I get some more levels up top there. We'll cover that tomorrow morning in the trade room. So we have a good idea of where the market wants to go, right? If it does break out higher. But at the same time, though, right, we haven't quite cracked out of this range here, right, for tomorrow. So I want to buy a pullback. I just don't have a lot of confidence buying aggressively on this pullback, right? So with the bulls in control, strong move up, looking to buy the dips. If it keeps going higher, we'll look to buy the breakouts here. Now, if I hit it my way, right, if they kind of asked me for advice here tomorrow, I would use the low of this channel, right? The low of that channel, and basically buy a pullback, right? Buy a pullback off of that low. That would kind of be what I would like to get here in the early part of tomorrow's trading session. To do that, though, right? If we do get that pullback, what I'd like to see is get underneath the moving average, right? Get underneath that moving average, run into the low of that channel, and I'll use a very typical what I call a failure into pullback combination. Okay, this is one of my favorite setups, these price action setups. I don't use indicators for my entries. I always use price action because indicators are going to get you in too late. All right, by the time the indicators trigger, most price action traders have already grabbed their first target, right? The smart money's trading the price action, the quote-unquote dumb money's, right, waiting for the indicator signal to fire off late, right? So that's a failure pattern, right, into a pullback combination. I'd like to get this thing pulling back. Again, strong move up, get underneath the moving average, get those bears to try to sell this thing short, right? Which might work, by the way, and we'll talk about that in a second. Get those bears to commit. Once they do, we know exactly where their stops are, and we can now buy right into those stop losses and then buy that first pullback right off the moving average. Failure pattern into pullback pattern combination. Right? That would be as we pull back. Very strong move. Find those levels of support, trap in those bears, right? And use their stops to fuel another leg higher. Now, again, you already kind of know where I think the market wants to go here for tomorrow. I will also use a measured move. So if we can get that pullback right in that long going higher, I'll measure that leg. I'll project that higher, and I'll use those two areas as my big objective for tomorrow, right? So again, we don't really know how far it's going to pull back right now, but that's where I'll look for my target here as we go. Now, if we pull back even lower, right? We pull back even lower. This is where things get a little more difficult, right? Let's say we pull back even lower now. Now we're back inside the range. And this is where things become a little more, again, just not as easy to justify getting long at this point. Momentum takes a hit. We pull back into the range. I can still buy this, but I now have to wait for the bears to try once, try twice. And once those bears try twice, right? Remember, what I'm doing is I'm trying to anticipate these bears getting after it, right, down into that trading range. What I'll do now is, again, those stops are sitting right above that high. And there are basically two ways to get long on this one. One, I can draw the trend line and buy off of that trend line, right? That's my favorite between you, me, and YouTube. And then, of course, right, the buying those stop losses. Right? So it's going to be a failure pattern. Again, it's a failure, right? It's what we call a nested failure or a two-try failure. And of course, into stop losses getting run, buying into those stop losses, right? Now, by now, probably you're wondering, okay, well, at what point do we sell this thing short, right? At what point do we sell it short? Great question. If we get the pullback and the buyers come in and they hold that move and they jump, right? Now there's a big bullseye right on that low, right? Now there's a big bullseye. In fact, what will probably happen is we'll get the amount we go above the range. We'll project that down below the range, right? That's going to give us another, at this point, it's kind of anticipating another objective, right? For those bears down there. Low of that, right? Low of that wedge or low of that triangle. Okay, so now we get the strong pullback, right? Or it doesn't need to be very strong, but pull back, the bears hold, and they jump, right? They jump off the moving average, okay? We call that 1, 2, 3 reversal, right? Now, what do you do at that point? Whatever you do, don't chase it, right? Don't chase it lower. We don't want to sell low. We want to sell high. And to do that, I'm going to mark up that high, that low. I'm going to grab what I call a hidden channel, and I'm going to drill down to a faster time frame and look for one of my 4 price action setups off the high of that channel. Now, again, this is a 5,000 tick chart. Okay, this is a 5,000 tick chart. What I'll do is I'll drill down to like a 1,000 tick chart, and I'll grab my 2 favorite entries off the high of those hidden channels. And again, where's my target? Down at that 60, give or take 61 3/4. We'll know once we know the size of the move going higher, right? But I'm looking for my 2 favorite entries off those tops are what we call trap entries and failure entries on a faster time frame. Now, I'm not going to go over all those small details tonight. The video is already long enough, but I do include all those smaller entry technique details in our quick start trading class. If you want a shortcut to get all your software set up, your indicators ready, finding the right support and resistance, and most importantly, timing the entries with one of my 4 price action setups, I cover all of that information and a lot more in that quick start video series in the upper little button there for you guys in the upper right hand corner. Think of it like a shortcut to getting everything set up so you trade just like we do in the trade room. And I like to give that away for free because I want you ready for trading it with us when you come out and join as a member, right? So grab that free quick start class, get up to speed with us, and you'll see why I love what I call my 3-step strategy so much. Okay, so now we can know how to buy it on the pullback, how to sell it on the reversal. Now, is there any reason we couldn't go 1, 2, 3, get that short off the high and then run lower? Is there any reason why I couldn't then wait for the bears to try once, try twice, and buy it right back up again? That's exactly what you're doing at the low of that range, right? That's exactly what you're doing here, right? So again, trying to sell that move lower. They take out those lows. The range is still a magnet, but now we're what? Now we're very bearish though now. We're at support. I want to be a buyer. So respect the bears, but look to be the buyer. 1 try for the bears, 2 try for the bears, right? And again, think about drawing that trend line off the low, buying off that trend line, right? Or again, the easy one is just letting it rip into those stop losses for that snap, right? That snap going higher there. So we can definitely play both sides of this. We can sell the rotation as it goes lower and then use those 2-try failure setups. We talk about those in the quick start class. Those failure setups, right, we talk about, of course, to buy it back up here. Now, how do we trade breakouts? There are 2 basic types of breakouts that you want to look for right now. One of them is called the 2-try breakout. And it's very simple. You want to wait for a strong move up, right, which is pretty much what's happening right now. Look for a shallow pullback to the moving average, a higher high in price. Okay, strong move up, shallow pullback, higher high in price, right? Write that down. Strong move, shallow pullback, right? Strong move, confirmed momentum. The shallow pullback drives all the buyers crazy, right? Because it doesn't give them a nice deep entry, and the higher high confirms the move. You want to get into that trap. Okay, this is the best one. What I think is the best one. Right? That, again, we call it a 2-try breakout. Strong move up, shallow pullback, higher high in price, trap low. Now, sometimes what happens is let's say, for example, the market pulls back and just jumps, right? Sometimes we don't get that pattern. When that happens, we call these 1, 2, 3 breakouts. Okay, now remember, we're not just simply trading, right? We're not just simply trading that first pullback, right? Unless we can get that move lower, that failure, right? Use those stop losses, right, as fuel. But if they can hold that pullback now and run, now we know this range below us is no more. And now we expect, again, we talked about kind of how to anticipate where this market wants to go, mark up that high, mark up that low now, and again, drill down, right? Not on a 5,000 tick chart like this one, but drill down to a faster time frame. Look for those bear traps, those seller failures. We oftentimes see what's called a failure into pullback combination, right? It's a combination of two of my favorite price action setups, right? And again, you'll learn that stuff in that quick start video class, right, to bring up to speed in the upper right-hand corner, all right? Now, I should also remind you, too, that we may see this thing, for example, right, little strong move up, right, two try trap. We may see this thing start going sideways again. It is, again, remember, it's going to be a little bit lower volume this week, whether we like it or not, right? It's the end of the month, but it is a short holiday week, holiday weekend ahead of us, big news later this week here. So don't be surprised if we see this go higher here overnight. We get that two-try trap, right? We get the entry we want. We're looking for it to go to the moon, right? We want to see it go all the way to that, 94 3/4. But all we get is this thing going into a range, right? What do we do with a bull market into a range? We look left. We find levels of support, such as prior swing highs, and we look to combine those support levels with what? With failure patterns, right? So failures are your bread and butter. Whenever you've got, remember, failures, not just buying low, but buying at support below the trading range, all right? That'll give you a nice, easy setup, again, off support below the range here for tomorrow. Again, we're going to go over a lot more details of how to find those setups and kind of what you'll need inside that quick start trading class, or else you can come out and do it with us tomorrow morning as a member of our trade room. All right, looking good. S&P, I really, really like the S&P. Just make sure, remember, if we get back into that range, if we start to settle in there, sit on hands and wait for a breakout. We'll cover more details tomorrow in the trade room. Let's keep going. How about some Nasdaq right now? Now, Nasdaq, the key takeaway in the Nasdaq right now is this spike in channel, right? Spike in channel, pretty obvious, I think, right? We get that strong move up. The market kind of chops around, right, into a spike in channel. That's kind of the key takeaway on the Nasdaq. We're definitely a bull market. We're a trending market. And so we're thinking, we're buying pullbacks. We're watching out for reversals, which this is definitely a market that has potential for a reversal. And we're also keeping an eye out for ranges tomorrow. The same thing I talked about in the S&P, right? We got these big bull markets right now. We're anticipating a, relatively low volume week. Shouldn't be that bad, right? But we're expecting to see a little bit downtick in volume, and that may lead to some ranges here. So we'll keep an eye out for ranges here, right, for tomorrow. Especially since, and I think this is a really big clue, anytime we see a big move in today, the following day is oftentimes a range. Okay, it's one of the things I have in my notes here for tonight. Anytime we see a big move today, the following day is oftentimes a range. You can flip that around. If we spend a lot of time in a range, we know a breakout and a big move is likely coming. That's why I said on gold earlier that gold is one of those markets where there's potentially a nice big breakout coming here sooner rather than later. So big move today. Anticipate the likelihood of a range here for tomorrow. And you can see we have that range right there in front of us, right? We definitely see that range is there. Now, I don't think that range is the most important thing on this chart right now, because you can see, right, I've got that measure mover ahead. I've also got what I think is probably going to be the big objective right now on this NASDAQ. When you get the markets, here's an easy trick. Whenever you've got these kind of all-time high markets where they're grinding higher, you get that really deep pullback, right? And it snaps back to the high. What you can do is you can actually measure the size of that pullback and then project that up. It's kind of one of the best tricks of finding next targets, right? For, again, for these all-time high markets, because there's not a lot you can use up there, right? There's not a lot of levels of resistance up there that you can use. So, this is a good example of that, right? I've got this the all-time high was right there as we finished up last week. We went up, deep pullback, we blast higher. I would anticipate these buyers are going to keep on buying here until they get at the very least up to that 14,530. As you can see, I've marked up the big leg up, right, to project to a measured move. So that's where I'm getting this area right here. It doesn't, I would imagine these buyers are not done yet. I can see that 14,500 big round number. That's a pretty juicy round number, right? There's a lot of zeros on that price label. So, they might do it here. But again, this is all again, I say this because we are anticipating that potentially a range here for tomorrow, right? So we're kind of looking at, okay, we got some levels of resistance above, right? Major levels overhead. We may go up into that area and then, right, to that sideways range, or we may sink right in and just go into that range here, right? So just kind of be aware of that. Big day today. It's no guarantee, obviously, but anticipate a range right here for tomorrow. So, spike and channel. Okay? When it comes to spike and channels, there are two basic things you want to trade. One is you want to trade the pullback off the low, right? That's the one that's a little aggressive right now because of the range below us. The second one is a pullback down to the base of that channel. Okay, so these are the two. Like if I had it my way tomorrow, I want that deep pullback, right? And I'll talk about kind of how we'll trade that here in a second. But when you think of it as spike and channel, okay, the first thing you should think of is a pullback to the base of that channel. So see how the market goes running higher, pulls back, and then goes up into that channel, right? That's the base of the channel right there, right? Think about drawing a line right where that channel hits that spike, right? That's kind of where the base of that channel is. And you can see it's very convenient, right? It's very convenient how it's right there at that 14,200, which is conveniently that prior all-time high. Would you be surprised if we went all the way back, pulled back to that prior all-time high, almost as if to give the buyers another chance to get on the bus? Yeah, that would make a lot of sense, right? Because we had such a big move up in the early part of the day today, and you'll notice there really weren't that many pullbacks, right? There really weren't that many pullbacks. So a deep pullback tomorrow would definitely be welcome. All right, so enough of the chit-chat. What are my favorite trades for tomorrow? If the market pulls back, I would love to buy a shallow pullback, but what's the challenge here? There's actually two big red flags. One, I'm pretty high up, right? I have to anticipate that is the kind of the objective, right? That 530 area. So one concern is I'm relatively high on this chart, right? Relatively speaking. So that's one concern. The other concern, which I think is the bigger concern, is the range below us. We don't really know yet how much that range is going to impact us. Now, at the same time, very nice bull trend. I don't think they've reached their objective yet. So I would like to buy this. The problem is that range. Sellers are going to try to come in and try to take this thing back down again. I need to be careful with that. So what I'll do is I'll wait for the bears to try a few times and look for a trap. Right? Look for a trap. Traps are always the best entry when you're trying to avoid what? You're trying to avoid buying high, or you're trying to trap in this case, the sellers who are trying to come in and short that pop, right? So that would be again, not my favorite entry, but it's a trade you'll definitely need to take, right? It's not a question. Now, I might go half size position on it, right? Maybe not a full size position. The one you really want is if we can get this thing to pull back down to that base of that, again, the base of that channel. Now we have the range in our favor, right? Now the range is helping us as a magnet. How do we trade this now? So what's the problem now? Is it location? No, it's a great location, right? What a great spot to get long. What's the problem? Momentum. Momentum on that pullback will be very strong. The bears are not going to give up without a fight. They're going to want to go back into that big range right from late last week, basically. So what do? You give the bears the benefit of the doubt. You let them try a couple times. Let them try once. Let them try twice. Right? Remember, draw that trend line off that low. Figure out where their stops are. I can buy either into stops. Let me grab this. I can buy off the trend line. I can buy into stop losses. Again, we call these two-try failure patterns. And you'll see a lot of these examples in that quick start trading class, right? That shortcut trading class in the upper right-hand corner, right? You'll see a lot of examples of that in that class because we see a lot of these spiking channels. Spiking channels are very common. It's definitely one of those chart patterns that every new trader really needs to learn and learn quickly. So I want to see a pullback to it. I'd love to get that. Again, that 2-try failure. And then keep in mind, at this point, we oftentimes won't get that pullback right away. A lot of times the market will go up and pull back right away here. In these deep pullbacks, though, oftentimes you don't get that pullback. So what we want to look for is that trap entry before we retest that high, right? Before we go back up and retest the high. So again, it's a 2-try failure. Let those bears lose it and snap higher. Grab that 2-try trap before we go back up and retest that high. That would really be probably my favorite way to trade right here for tomorrow, right? Makes sense? All right, perfect. So now we got that covered on the deep pullback. And of course, right, how do we sell it? We take off the downside. Instead of now the bears trying and failing, the bears hold it, right? They hold the pullback now and they jump off the moving average. What do we call that? We call that a 1, 2, 3 reversal in this case, right? So we take off the downside. The bears don't fail. The bears hold. What do? We mark up that low. We mark up that new hidden channel high. We drill down to a faster time frame, and we sell short off that high. Remember, this is a 4,000 tick chart, right, on the Nasdaq here. I'll drill down to an 800 tick chart and find some bull trap entries, right, some failure entries. All right, one of my 4 favorite price action entries. Again, I don't use indicators to time the entries. By the time the indicator fires off, by the time you get your divergence, signal, the trade's already gone, right? Most of the time, right? Even a broken clock is right twice a day. You'll find a couple of good indicator signals, but for the most time, though, indicators get you in too late, right? So I'm drilling down. I'm using my trap setups, my failure setups, right? My pullback combinations to sell off the high of that channel. Where are we trying to go at that point? We're trying to go back down and take out that low, right? There's a big weekend gap right there. There's a gap between last Friday's close and Sunday evening's open. That'll be a magnet for those, right, for those sellers, all right? Now, one thing we got to be careful with is if the market pulls back and gets stuck inside the range, right? If it pulls back and gets stuck inside the range, just wait for it to spit out the other end and then trade your failure, right? Your 1, your 2, and back up. Or let's say it, right, gets stuck in the range and it breaks out. What would be some breakout patterns, right? What would be some breakout patterns? Again, 2-try breakout, right? Market. Now keep in mind, we know we have a bunch of resistance here overhead, right? So we got to see some strength going higher here. Let's say, for example, we get that pullback, that shallow pullback, we get that trap, and the market jumps, right? Market jumps. We jump up, strong move up, shallow pullback, higher high in price, trap low. Now remember, if we have enough strength going higher here, it's not going to matter about these levels of resistance. Remember, if we have enough strength in one direction, it's almost a guarantee we get another leg in the same direction. So if we get that strong run higher, right? Remember, strong run, shallow pullback, higher high in price, traps, baby, traps, right? Remember, you can always grab that channel high, right? Trend line high, off that low, grab that channel, okay? But remember though, if we're buying high up here, we have to see a lot of strength, right? It's got to be rare. Again, you want to see it really jump off that moving average. Jump, right? Give us that nice strong move, right? Like back here, strong move up, shallow pullback, higher high in price, traps, right? Those are the entries you want to see as we go higher. Or let's say, for example, we pull back right now, the buyers jump off the moving average, just simply make a new channel, right? Mark that high, mark that low. Again, drill down to your faster time frame, right? Grab that bear trap, grab that 2-try seller failure, the failure into pullback combination, right? I cover all these price action setups to actually trigger the entries in that quick start video class, that shortcut class in the upper right-hand corner. All right, guys. And then if they keep on pushing this, 14,585, that's a big milestone. And then we have a lot of space overhead until 14,777, way up overhead, right? 15,000, of course, right, being the next big round number from here. So quite a bit of space to go if we can get this thing to really start to push. All right, guys, boy, looking great here. So now the Nasdaq is locked and loaded and ready for tomorrow. How about some gold? So gold is a range, right? That's kind of the key takeaway right now on the gold chart. It's a range. Range is, of course, of magnets, right? Want to buy low at support, want to sell high at resistance. As I mentioned before, and again, you can see I've got my levels of resistance above, my support levels below. Stay away from that middle. That's a triangle range. Like I mentioned earlier, though, this is not the only range we've seen, right? We've been ranging out here for quite a while now, right? So it's definitely one of those markets where we're all coiled up in a spring. This thing could easily jump, especially if we get some sort of kind of unscheduled news for tomorrow, right? Let's say some Fed speaker starts, running his mouth about inflation tomorrow, right? At some press conference. That could spark a breakout in either direction, right? I never try to predict how the market will react. I just make sure I'm ready for whatever the market gives us. So market's getting all coiled up right now. There's definitely potential for a breakout. Again, as I mentioned at the beginning of this video tonight, we have some bigger news later on this week, mainly that jobs report, which it does look like gold might be range bound until we get there. All right. I don't want to say that, but that's just kind of the way the market feels right now. The Fed has made it very clear the jobs aspect of this, right, getting employment back on track is going to be one of the keys to them, finally starting to plan out their tapering schedule for us, right? So if we see a good jobs report on Friday, that would be a good news as bad news, right, for the market. That would suggest, of course, the tapering will continue a little bit earlier. So while we get there, the market may end up again being a bit sideways. So just be aware of that. Again, we'll take whatever the market gives us right here tomorrow. The key is right now, buy low at support, sell high at resistance, and just wait for a breakout. Now, as the price goes up, price goes down. The most important thing right now is as the market goes lower, I want to get just outside what was called the edges of this range. This is a little bit different than your average rectangle, right? It's a triangle. So what you want to do is you want to think about the edges, right? That edge there, that creates resistance zone overhead. That edge there, that creates support zone below. As we go below the trading range, what we want to do is keep focused on failures. Let those bears get short. Once those bears try to get short, we now know exactly where those stops are, and we can buy going back up into that trading range, right? Now, one thing you want to keep in mind, if we see a real strong breakdown, right? Real strong breakdown, can I still buy that? Absolutely I can. But if it's really strong on the move lower, then what do? You respect the bear's momentum, you let them try twice, and you buy either off that trend line into those stop losses for the run back up again, right? It's a relatively simple idea, right? If we just get a shallow pullback, look for a failure. But if it just really jumps going lower, again, knowing there's this massive range over here, right? You look left, you can see a massive range here. So the range magnet is still in play here. Let those bears try a couple times, right? And then again, buy off the trend line, right? Or buy into those stop losses for that run back up into that trading range. And then if we do get that breakdown, then what I can do is I can measure the amount below, measure the amount above, and that'll kind of give me an idea for where that target would be on the other side of that trading range. Same thing goes as we go higher, right? Now, if we go higher here right now, there will be one smaller detail, and that, of course, is the fact that we don't have rotation, right? See, if I go lower right now, it makes perfect sense the market would go lower right now because that would complete rotation, right? It completes rotation. So if we go lower, right, it makes sense. But if we don't go lower, right, if we go higher here, okay, now that rotation doesn't exactly make sense anymore, does it? No, see, it doesn't. It fails to rotate. So that would suggest that there is something bigger going on. And that is a pretty big clue as far as I'm concerned. So if we do end up going higher here, can I still sell this? Oh, absolutely. You still can sell it. You just want to make sure you give the buyers the benefit of the doubt, right? Let them try once. Let them try twice. Again, draw that trend line, find those stops, right? And short back down again. So it's nothing really different there. It's just that's a really big, and that's, it's a little more advanced. You'll learn a lot more about this stuff in the video classes here at School of Trade, right? That failed rotation, right? So failed rotation makes this a big, big clue. It's a small clue, but a very big clue. It tells you that the buyers try twice and then sell short back into that range, right? And that would go, of course, if it rips higher here, right? Buyers once, buyers twice. Now, what about a breakout, right? What would a breakout look like? Well, breakout in this situation, we can get aggressive if it goes higher. We got to stay a little bit patient if it goes lower, right? If it goes lower, for example, I'm gonna wanna get that pullback and see him hold that pullback, right? I'm gonna want to see that strong move down actually hold. They haven't done it already yet. They haven't done it yet, right? So if we can get that strong move down, right, that pullback to the moving average, get that 1, 2, 3 go, right? Now mark that low, yep, mark that high, and again. Remember, this is a slower time frame, right? This is a 1500 tick chart. What you'll do is you'll drill down like a 377 tick chart. I'll walk you through all of that stuff in the quick start class. You drill down to the faster time frame. You find that channel high. You find those bull trap entries, right? Those failure into pullback combination entries. Again, all the price action entries I talk about in that quick start class in the upper right-hand corner. You can grab those off the high there. Now, where's our target if we can get that breakout going lower? We have another big zone waiting for us down at that 1761.2 there. Now, think about this. Could we possibly get a 1, 2, 3 breakdown? Get that short, right, off of that high, and then just like on the S&P, right, we get down into a major support area. Then the bears try once, the bears try twice. Will that be something we could do? Absolutely. In fact, that would probably be one of the best trades of the week, right? And again, you can trade them both ways. Trade the short on the way down on momentum strength, and then trade the failure going back up into that range. Because again, remember, it's one big range, right? It's one big range. So as we go down there, of course, you can buy that 61.2. Just again, make sure you respect momentum. Now, as we're going higher here, this is where things get more interesting. Like, for example, if we get that strong run higher now we have that failed rotation, right? Like I said earlier, strong move up, shallow pullback, higher high in price, traps, right? Traps are definitely going to be on your radar. Now, we may see that trap entry. They may take out that high. It may not go that far, right? From there, again, anytime we see a strong move, we expect another leg. It may not be a huge second leg, but it should at least retest that high enough for you to keep growing your account every day. And then from there, right, you're at major resistance. The range below you it's still a range, right? So buyers try once, buyers try twice, right? See how this works? And you can go back into that range again, right? Rinse and repeat. Or maybe we see this thing pop its head up, right? Nothing too impressive. Hold that pullback and jump, right? What's that? 1, 2, 3 breakout. At that point now, the buyers are hunting for something, right? Doesn't really matter what. At that point, you have enough momentum though now that you with that first pullback, first pullback is always the best pullback, right? That first touch right there, that's the one you want to grab. Right? Again, drill down to the faster time frame, find your price action entry, your traps, your failures, your pullbacks, your strength moves off that low, right? Where are they trying to go, right? They're trying to go up to that next battle zone, right? 1795, 1797, right? That's what those buyers want to get to next. And again, don't forget, I show you guys how to set the charts up, right? I show you all the important pieces of the puzzle, right, in that quick start trading class. So definitely grab that if you're not yet already a member of it. All right, we're looking pretty good here, guys. The only challenging part I see right now is if the market stays all coiled up, right? Which it might. Again, we got some big news coming later this week. Just be patient if the market stays coiled up, and we'll update things as we go forward tomorrow morning in our trade room. All right, guys. Speaking of trade room, boy, right around the corner here, 8 o'clock Eastern time. I would love to have you there trading this stuff right along with us. What I'll do is I'll put everything you need right below this video in the description, or I'll put a big button for you to get registered on our website here. So either hit that big button below this video or grab that link in the description. Don't miss tomorrow morning, 8 o'clock Eastern time, Monday through Friday. Get registered. Right, get a bunch of different options here on our website right now. Get registered, and I'll see you tomorrow morning. If you have any questions, we've got different payment plan options, some bonuses going on right now. If you have any questions about membership, don't be afraid to call the office, or if membership isn't quite right for you right now, don't be afraid to shoot me an email or jump on Skype or call me about brokers and computers and data feeds. I would be happy to give you the important tools you need right now so you're ready to go later on in the month or right somewhere in the middle of July. Don't forget live chats there for you. So keep in touch, and I hope by now you subscribe to our channel, right? Because we're going to do this again tomorrow night. Lots of good stuff on this video, and I hope you'll share this video with a friend, right? Grab the YouTube link and email that to a friend, because everybody can really benefit from the knowledge we're giving here in this video newsletter. All right, guys? So thank you so much for tuning in tonight. Hope you learned a bunch, and I'll see you tomorrow morning at the opening bell. If not, make sure you come back and see us for tomorrow night's video. We're gonna walk it back, and we'll do it all again and get ready for Wednesday's trading session. All right, guys? Keep in touch, though. Drop those questions in the comments section, and we'll see you guys, as always, right? We'll see you guys tomorrow morning at the opening bell. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.